In this video, I'm going to show you how to use our live scanner along with actual charts to understand when ETFs are rotating and how to leverage intraday volatility to take advantage of some of these sector rotations before they happen. For this video, I'm going to focus on XLE. Why XLE? We'll take a look at our sectors today, and you'll see XLE is at the very bottom, down 2.7%. So why are we interested in a long side opportunity here, you might ask? Well, I think this opportunity, or rather XLE being down 2.7%, is an opportunity to take advantage of intraday volatility here. Let me start with intraday price action, and then we'll zoom out to our swing trading activity here to build that setup. Since after hours, we've seen XLE is sold off, and after the market opened, you can see how XLE very systematically sold off into our conservative volatility box models. On our live scanner, you can also see XLE has appeared 15 times. That tells you how active XLE has been in terms of its particular volatility today. Now, the way we know when we're actually interested in going, in this case, long volatility, is by using trigger clues. You can pick the time frame. I like to use between the 2-minute and the 5-minute time frame charts, and I'm simply looking for momentum to give me signs of reversing. That's this blue dot. And this blue dot is nothing magical. It's simply the 3 EMA crossing above the 8, telling me that the shorter term momentum is reversing. Price falling into the volatility box clouds tells me that I have a volatility edge here. Here, this happened on our conservative daily model, something that doesn't happen too often. That too in an ETF, which I would like to get long on the daily time frame. Now the question comes in, why? Well, I think there's a few different reasons. One, we have Fibonacci symmetry. I've taken our swing high here, projected some previous swings, and currently we're inside of this zone between, call it 88 to 79. That's a wide zone, so I would like to find better entries to get involved. And I think this intraday volatility is my excuse, my reasoning to make that process very simple. It's telling me that we have a volatility edge here. I'm looking at this trend to now shift from this point. Second, market pulse here is green. We can see that with the market stage of being an acceleration leading all the way up to our current candle. And if we see price close above this line right here, this market stage is going to very quickly flip right back to either acceleration or accumulation. So we're flirting with this line here. Don't read too much into this stage currently being in distribution. That simply tells us that this trend is now entering a little bit more chop. So if we are in chop, we want to find better places to get long. And even there, what better place than a gap fill, pull back to the market pulse line, and a place, most importantly, where you can manage your risk. I think the risk on this particular setup can be less than $1, and your upside potential, even if you took this off near the 88, is at least a 1 to 3, which I think makes this trade worth taking. So that's my setup in XLE. I think XLE is giving us a nice entry here today. I've taken advantage of the intraday volatility here. I used a 5-minute momentum cross, this candle right here. So I'm currently a little red on this position, but I used this for an entry close to 86.05. That was my entry inside of XLE, and that's what I'm looking to play off of for this upside move. Now, one more ETF, just to leave you guys with another one in case you're interested, is XLV. I've also started building a position in XLV, which fell into our Fibonacci levels. One more time, this is just smaller symmetry, not larger symmetry. This is under the pretense of I think this trend has now ended, and I'm looking for us to build a base and for XLV to also reverse here. So XLV, another one I built a position in. And if we come into the intraday time frame, XLV, you'll see the daily model is conservative, nowhere near being breached. So not enough volatility as we saw inside of XLE. However, XLV did still have some interesting volatility throughout the day. If I load in our hourly models, you can see that a little bit clearer with the entry points whenever price sold off. And we've also seen some short side entries telling us that there are buyers hanging around in XLV because they've managed to get price all the way up here. So that gives us a clue. Two ETFs, two of the weaker ETFs from today's activity that I've built a position in, leveraging the intraday volatility for a longer term swing trading entry. All right, markets officially ended, and here's how XLE ended. We closed above that market pulse line with the market stage of acceleration, and I think this pullback is still valid. So I'm officially in both XLE, XLV, and both of these were using the live scanner along with the volatility box models to see where do we have the intraday volatility edge and how can we position ourselves where we take advantage of these levels in an intelligent way, not just a random throw the dart at the wall and see what sticks. For those of you interested in the volatility box, I'll leave a link to learn more about our models and sign up in the description box below. Take care, everyone. Good luck trading, and I'll see you in our next update.